So hello and welcome to the symposium on Will Central Bank Digital Currencies Become the Norm? We're joined by a number of panelists today and we're going to go around and hear from each of them just to introduce themselves. Let's start with Alan Lane. Alan.
Yeah, good morning. Thank you. It's great to be part of the panel, see some familiar faces. And so I'm the CEO of Silvergate Bank. Silvergate is the leading provider of banking services to the growing digital currency community, and happy to be here.
Jill, can we turn to you next?
Sure, and it's a pleasure to be here with such a great and esteemed panel. So I'm Jill Richmond, co-founder and chief revenue officer for Jewel, which is a proposed digitally native Bermudian-based bank. We are in the final stages of our application with the Bermudian Monetary Authority and expect to be live sometime at the end of February 2021.
Thank you, Jill. Diogo.
Hi, my name is Diogo. I'm the co-founder and president of Anchorage. We are an institutional platform for institutions to be able to participate in crypto assets, providing anywhere from custody to staking to brokerage, lending and credit.
Thank you, Diogo. And finally, Catherine.
Hello, I'm Catherine Coley. I'm the CEO of Binance US, and we are a digital asset marketplace based here in America, continuing to expand for both retail and institutional offerings and ways of trading digital assets. We have over 100 trading pairs and 3 ways of trading. So OTC, regular order books, and then an easy way to buy crypto instantly.
Thank you very much, everyone. So what we're going to be talking about today is the central bank digital currency landscape as it currently stands and how it's going to evolve in the future. Alan, my first question to you. What do you make of the current CBDC landscape and how has it changed recently?
Yeah, Billy, that's a great question. I think it's changing almost daily, I think. A year or so ago, you didn't really hear much about CBDCs in the US, for instance. There was certainly talk about the development efforts going on in China and in other parts of the world, but there was almost an attitude in the US of, well, we don't really need that, everything's working just fine. And that has clearly changed over the last couple of months. It seems like a week does not go by without some comment from some US regulatory agency regarding central bank digital currencies. And so, yeah, I'm sure other panelists here have thoughts as well, but as a banker, I'm watching with keen interest.
Jill, as a proposed banker, building on Alan's answer there, how do you see the landscape for central bank digital currencies evolving in coming months and years?
Yeah, sure. I mean, look, I'll echo what Alan said, right? Only to say that we've seen an acceleration over the past year. So I think we're looking at, the BIS has indicated that about 80% central banks are doing at least some kind of research on the topic. And to the extent that we're literally starting to see the macro effects that have created in some way, shape or form, the acceleration of central banks starting to not just look at proofs of concept, but really starting to move forward in implementation. And in many ways, from our perspective, so we're a proposed bank in Bermuda. We are not, there is not necessarily a central bank. So for us to be in a respective public-private partnership, we are eager to see where essentially both the private and the public start to merge together in the implementation of what CBDCs and stablecoins can effectively look like and how they can coexist.
I think that that way that they're going to work with stablecoins is one of the biggest questions that a lot of people have around this topic and how they're going to impact the existing stablecoin market. Diogo, if I can turn to you next and get your perspective on that specifically, how are central bank digital currencies going to affect the current market as it stands?
Yeah, I would say that they will definitely be positive towards the current stable currencies, primarily because they actually serve very different purposes. The current purpose of a stable currency, as you see it today, is usually based on a public blockchain, something like Ethereum. And that means that it has a certain type of properties around the ownership of the asset, the decentralized nature of the issuance, and the ability of actually being self-sovereign in the sense of you controlling your own asset, in a way that a lot of the proposals from central banks and a lot of the proof of concepts that are being proposed are not necessarily the case. So I would say they augment each other. And in a way, if you think about it, the fact that they normalize digital assets in a wallet having actual dollars will be very good for these other dollars. In this case, the dollars of the stable currencies based on public ledger blockchains.
And Catherine, as the chief executive of Binance US, a very prominent cryptocurrency exchange, how do you feel your users will respond to these kind of central bank digital currency developments?
Well, absolutely. I'll kind of take it back, taking off my CEO of Binance US hat and putting on my first hat that I had, which was in foreign exchange over at Morgan Stanley, recognizing the magnitude of the FX markets and the meaningful impact that a digitization of these global currencies could have is something that is a large reason of why I got into digital assets in the first place. It's that insane amount that we have $6 trillion trading and crossing borders. And for that to become, digitized or implemented on a blockchain, that's going to be an extreme acceleration of the other attributes that you can do with money. It can finally become the money of the internet that we need today. And it kind of accelerates us to be able to use money easily and accept money in ways that we've been burdened before. So I'm extremely excited for central banks to pick up and start learning. I will admit that back in 2017, I attended a summit for central bankers. And it was interesting, their perception of digital assets was very closed to their own country. So they were evaluating it on a inside Canada, inside Brazil, inside Japan notification. And they weren't really looking at it as a cross-border mechanism or something that could allow for an ease of exchange across borders. And so I think that was something that really had to flip the switch for central bankers to realize the benefits of digital assets beyond their borders, more so than the convenience inside their borders. Especially in the United States, we have pretty great payment rails. Alan knows a lot about them and is improving upon them as well. But the speed to which you can send $1 from Alabama to California doesn't burden us as much as moving dollars from Hong Kong to Malaysia and to Singapore. And so you have to see those benefits impacting certain geographies more so than others. And that's why you're seeing a lead and a lag in some areas with those central bankers.
We do have quite a US-centric, not entirely, but mostly a US-centric panel here today. But as Catherine just explained there is a big gap between where different countries are in central bank digital currency exploration or development. Catherine, sticking with you, how important do you see the regulatory landscape in the US specifically for central bank digital currency development? And really, I suppose with the digital dollar interest, how important will that be for not just the US dollar, but for CBDCs generally?
Well, typically, if you have the most to lose, you're going to be the most protective of what you have. And so the United States being kind of the kingpin of capital markets, every foreign exchange transaction has to go through the dollar except for Euro NOK, but no one really trades that as much. But the aspects of everything having to go through the dollar and be based in the dollar and reserve currencies be fundamentally built upon the dollar's value, that is a huge element that regulators are trying to reconcile. So by us informing an innovation on top of the US dollar, that's shifting more than tectonic plates in some aspects of banking and financial services. So that has to be very well crafted and has to be very well researched in order for regulators to feel comfortable with this. But I've pushed earlier in March when we were beginning to see the injection of dollars. The US, by having this dominance in dollars, is also printing more of them rapidly. So there's an aspect of what can we do to digitize things to improve the current state of our markets while not impeding the innovation that is necessary for other countries to succeed economically. And is that in our best interest as the United States? And the larger issue is why would we inhabit something that is good for the world when it is just good for our own borders?
And Jill, I'd be interested in your perspective here as a proposed Bermuda-based bank. How much does the discussion around a potential digital dollar, or how important does that seem to you?
Oh, it's very important. For us, we intend to be a bank which is, issuing dollar-denominated stablecoins, among others. And to the extent that, Bermuda is, pegged to the US dollar, it's incredibly important. And so the notion that we are, building the entire infrastructure and rails that are there to enable a lot of the cross-border settlement time, movement of money, et cetera, that is our wheelhouse. That's what we're spending the most amount of time focused on in terms of product development and design. So I'll leave that there.
Sure, thank you. Diogo, Anchorage's role in Libra, Facebook's Libra, which was arguably one of the big kickstarters to much of the central bank digital currency interest that's come up over the last year or so. How important do you see Libra being as almost the inspiration for the digital dollar or any potential digital dollar, and how much might we see, in your opinion, the US draw on things that have been learnt from the private sector in development of a digital dollar, or really any other kind of central bank digital currency?
I would say it was definitely a major inflection point in the conversation. It was night and day before Libra and post Libra, and that was obvious to everyone that is in the market. And I think if you ask any of the other panelists, you'll get the same answer. And I also think that the private sector naturally moves a lot faster than any kind of government's CBDC that is issued. And it will actually base itself on a lot of the learnings of the public currencies, of attempts like Libra, of other elements in other currencies that are attempting to do stable currencies, things like Cello, et cetera. So a lot of those learnings will be built into whatever comes out from the government. It's also pretty interesting that it's being used and pointed at as an answer to, or China as an answer to Libra, and Libra itself as potentially the American answer to the China CBDC efforts. And people are saying, hey, should we have the private sector be the ones actually doing this? So what we're seeing is a Cambrian explosion of attempts at doing it, not just CBDC, but also stable currencies on their own. And Anchorage's role has been from day one a regulated technical provider and platform that enables anyone to do any of these, not just custody, but issuance, minting and burning, a lot of these other elements around management that are necessary for you to either issue a stable currency or for you to issue a CBDC. So in that regard, we've interacted with a lot of different entities that are looking to do similar things to this.
Sure. I think that's the first actual mention we've had of China yet so far in the conversation. And of course, China and their plans for a digital yuan has been, along with Facebook's Libra, one of the prime motivators, I think, for many other countries around the world looking into central bank digital currencies and kickstarting that big exploration leap forward and a true development of a central bank digital currency. Alan, if I can turn to you and hear your opinions on how China is leading the way here. I mean, how much do you think that the world is effectively going to end up following China, or will we see a lot of divergence from the eventual digital yuan?
Yeah, it's a great question, because obviously the the entire government structure of China is very different from a lot of the free world. And so how they might go about creating a central bank currency versus what the U.S. might do. And I think this is one of the things that Diogo was just what he was just touching on, which is is there a private-public partnership? Is there room for all of us to be working together on this versus kind of this top-down, government-imposed currency? And I think that's also really what has kind of been the turning point. And Catherine was talking about this earlier, how a year or so ago, a lot of the countries were thinking internal, right? They were thinking about just, well, and that's, I think, why the U.S. was a little slow, because the U.S. was thinking, well, everything, the U.S. payment system works fine for those that are in it, right? It's very efficient. It's one of the most efficient in the world. But as both Jill and Catherine were talking about, when you start to think about cross-border, that's where the U.S. really has a lot to lose, right? Because the U.S. dollar is the reserve currency of the world, and if we don't strive to maintain that, then we have a lot to lose. And as Catherine said, those who have the most to lose are bound to be the most protective. And I think we have to be careful that the U.S. government doesn't get so protective that they shut themselves off to the concept of this public-private partnership. One of the projects out there that is focusing on this is the Digital Dollar Project, and I encourage folks to read that white paper. Whether or not that's the one that actually gets traction, I really like the way they framed the discussion in the white paper about this public-private partnership in terms of the launch of a potential currency.
Sticking with that and the Digital Dollar Project there, I mean, it is they're very motivated. They have clearly defined goals, and they're clearly willing to take this as far as it needs to go. Do you think they're going to be successful? Are we going to see in the relatively near future, or the foreseeable future, I should say, either digital dollar or something akin to it? And will there be comparable CBDCs elsewhere around the world?
Yeah, I honestly think it's inevitable, given the Cambrian explosion of digital currencies. Somebody else said that word already, and it was overused years ago, but I haven't heard it recently, so I thought, yeah, we should reintroduce that. It's time.
This panel bringing it back.
Overton window is next.
There you go. But honestly, I don't know whether the Digital Dollar Project will be the successful one. But one of the reasons I've recommended that white paper to a lot of folks, because it also talks about one of the other major differences, potential major differences, would be whether it's a tokenized dollar or whether it's like a dollar on a ledger, a central bank ledger, right? Which is, I think, the way China is considering it. And that has huge implications also for the way the government stimulates the economy even, right? When you think about the central bank of the US, and then how it's commercial banks that are actually doing the actual lending, they're the ones taking the deposits in. There is a lot to figure out. And I think it's going to take a lot of smart people. So I don't know whether the Digital Dollar Project will be the successful one. I just point to it as a thoughtful, presentation of what some of the challenges are.
Diogo, I think some of the points that Alan raised there throw up some further questions about exactly how different countries are going to potentially implement CBDCs, and whether they are going to base it effectively on blockchain technology or not. How important do you think blockchain would be for a potential CBDC? Could we have one or even many without it?
Yeah, I think as was mentioned, it heavily depends on the geopolitical positioning of the particular country in question, whether you actually want to open the borders or make it not be open borders. I think from a technology perspective, it's hard to believe that any CBDC will start by being built on top of public ledger like Ethereum. And it's a lot likelier that we'll start a lot with tighter control so that they can freeze funds, so they can actually have the same types of instruments that they have in the traditional world. However, let me point out that I do think that the public in general is clamoring for transparency in the financial industry, and any kind of public ledger, even if private public ledger, in the sense that it's a transparent to the outside, but you can't actually participate, and it's centralized, but it's actually visible, and there's an indelible ledger that everybody can look at, would be already very useful. It would be great to have a real-time feed over what's happening with this type of digital asset, the same way that we have some of the public cryptocurrencies that are out there. So I do think that would be a huge advantage. And the rest of it, of how it's implemented, what technology will be implemented, I do think there will be a lot of diversity on what different governments will choose to do. Maybe some of them will use local technology, local companies, local private companies that have their own preference in terms of what to build. Some of them might probably attempt something more edgy, more on the public ledger, but the majority of them will probably stay with private technology that hopefully is actually transparent to the outside.
Depending on how far each of these countries do choose to go, it could mean that CBDCs are quite detrimental, or at least impactful, for the existing financial industry. Jill, how do you see either the traditional industry or the up-and-coming industry that Joule is a part of, either being impacted or potentially even benefiting from central bank digital currencies if they do become the norm?
Sure. I mean, I think we still, again, I'm going to pose the optimistic view, which is the proposed CBDC models. Again, it depends on location, geography, all of the above. But to the extent that we see ourselves as saying the opportunity lies between the nature of the private institutions and the public institutions. And for us, we see ourselves as being able to build from those respective relationships, right? As a regulated bank, an issuer of respective stablecoins, being able to provide a lot of the compliance, AML, KYC, the stickiness around utility. Again, from our perspective, we still see a world where we are participating in that uptick of CBDCs in general.
And as you do participate in that, how much do you think that banks like Joule and other financial institutions that are part of not only cryptocurrency but broadly the new wave of financial technology companies, how much do you feel that you guys broadly get to steer the ship here? I mean, how much scope is there still for influence in the direction of travel?
Well, I think it goes back to infrastructure, right? And we still have, banks that are operating off of serious legacy rails. So our ability to be able to build, deliver, ship, and support a lot of those respective private banking partners in the acceptance and otherwise through infrastructure build, I think is where the opportunity lies for us, right?
I see. Catherine, I mean, I feel that Binance has been quite, or Binance US, I should say, has been quite developing in terms of regulation in the US, opening in a couple of new markets quite recently, and trying to stay apace with the regulatory landscape there. How much do you guys feel that the central bank digital currency regulatory situation is still an evolving one, and how do companies like Binance US have to stay abreast of that and make sure that they know exactly how things are developing?
Yeah, I mean, regulation was one of the key factors. When we first opened, we immediately had an office in Washington, D.C. with our legal and regulatory base there because unlike many other marketplaces in the US, our sole focus is America. We are not distracted by the exciting things happening outside of the borders of the US, and we are not deterred by the difficulty or the lack of clarity around regulation. We're here and dedicated to this market, and we'll see it through to its success. So that's really where we stand in helping those that are making these rules understand the importance of digital assets, the utility of them, and the adoption across the US that's necessary. But on the lines of where do we see central bank digital assets coming into play, I think of it more like traffic lanes. So you've got maybe your walking lane, your bike lane, your HOV lane for two people only going extra fast, and then you've got your regular congestion with traffic. And while we have these behemoth ideas of central banks adopting digital assets, that doesn't deter us from still moving forward and innovating on the HOV lane, I'll say, for those with a lighter load and more economical environmental savviness in our Prius going around, and making sure we can still, still drive within the lanes of the road, still follow the rules and the speed limit, but are just able to go through things a little bit faster, being in the private sector, being a nimble, user-centric marketplace that is trying to deliver the current and now to the market, as well as be able to accommodate the future.
Building on that, if we do see the kind of digital dollar in the US central bank digital currency development that some have proposed of the form of Fed accounts and proper digital dollars in people's digital accounts run by the Federal Reserve, how do you think this kind of thing would affect the cryptocurrency market, specifically in the US? Would there be an influx of new users, and would the Bitcoin price get to new all-time highs because of it?
Yeah, I think I'll take this one just for starters, but I want to pass it over to Diogo afterwards. The regulation changes that we've seen so far allowing, and Alan would be great on this too. This is a great panel for this conversation, but with the OCC allowing for banks to become custodians of dollars that would be the reserves of stable coins or other digital assets that would be launched. It opens a realm of custody that most people are comfortable with now and concerned about going forward. Excuse me, there's traffic outside.
Yeah, I'll jump in and say,
Alan, sorry, Diego, yes, please.
Yeah, I'll say two things. I think digital dollars will have a major impact in the current financial infrastructure. So the market infrastructure itself, think about the companies integrate one another, settlement, all of these other aspects of potentially not the payment rails. There's a lot that will change there because we have this new, building block to use. And then there's the retail side. And that also depends heavily on what the implementation is. Is this an actual digital currency in which each American can have an account on an app directly with the Federal Reserve, and they're issuing directly so that, for example, the COVID payouts could have done directly towards each individual in the US? That is a massive, massive change in adoption of behavior, because now people get used to the fact that they have a wallet that is real money, the most real money that there is at the top of the pyramid of money, which is federal minted dollars. And so that would actually start having an equivalent in their minds to potentially assets like Bitcoin, which are stores of value and have very different use cases. But the process would change, and that would dramatically help cryptocurrencies in that particular market.
Alan, turning to you, if you could add anything.
Yeah, I'm not sure I have much to add to what Diogo and Catherine have said in that regard, other than to agree. I do think, to the extent that the dollar is digitized and the average person is, becomes accustomed to paying for things with a digital representation of the dollar, which many people already are, right? Whether it's Apple Pay or any form of payment app on an iPhone or an Android is a step in that direction. I do think Bitcoin's in a little bit of a class by itself as a digital asset and as a longer term store of value. But I do believe though the intersection of those two, ultimately a digital dollar will help to make people more comfortable in the Bitcoin world as well. And so I just see this, I said earlier, I think a CBDC is somewhat inevitable. And I see all of this converging, and everything that we do is becoming digital, right? I mean, everything from Netflix, everything is now digital, and I see no reason why central banks will not have digital currencies in the future.
I'd like to push back on that. Sorry, Catherine.
I do think just adding to everything is digital. We've especially in the US, had such an acceleration of the adoption required because of the lockdown that we're currently going through. So aspects like learning how to use Zoom when you weren't going to be using it is one that is just forced even my grandmother to learn how to use video communication. So as we continue with this, we'll see kind of forced utility because we need to be able to accommodate to our ways that we're currently living in. So digital payments is going to have to take place because I can't go to the store when I'm allowed to or whatnot. But if that changes in the near future, we could see a pullback in terms of the necessity that people feel around digitization. But I think once you've touched it, you realize how easy it is, how safe it can be, and how transparent it is compared to the other forms of currencies.
And only if I may, I think we're all kind of working towards this North Star, everyone on this panel, which is where the movement of money is as easy as the movement of information. And to the extent that this, all ships, we hope all ships sort of rise. So on the educational level of being able to hold, as Diego points out, a wallet and know the safety, security, all of those components from a retail and institutional level are one of the things that will absolutely promote adoption. So,
Diego, just finally, if you can add something as well to this particular discussion that we're having, I'd be interested in whether you think that the current COVID crisis and its as we've just heard, this push towards digital, has it influenced regulators' perspectives? Are we seeing a change on Capitol Hill and in other seats of government around the world because of this?
I would say my first instinct is to say no. They had a lot larger things and problems to be concerned about. So we definitely saw a dramatic pause in terms of a lot of the conversations that have since resumed, since we've seemed to have gone to life as usual, gone back to normal. So I don't think it has accelerated. It definitely decelerated in the beginning, just because obviously there were larger pressing issues. I do think that we're in a really good path. A lot of the announcements that have come out, like the OCC guidance, are fantastic. We have a lot more people interested. There's one more step towards clarity of banks being able to participate in this space. And that means that everybody wants to get involved. Whereas before, people didn't really think that this was going to be something that was okay. Now they see all of these, they see the breadcrumbs and they see where they're actually going. And so, like Joe was saying, we're all going towards the same North Star. So for us specifically, it's been very exciting. We've definitely seen a market pickup in terms of the types of partners and the breadth of institutions. Whereas 2 years ago, institutions in crypto were primarily VC funds and crypto funds. Now we're seeing every single type of institution under the sun, either asking questions, running proof of concepts, wanting a technology partner, wanting to do issuance of their own cryptocurrency, thinking they can do a better stable currency, thinking they can do interest-bearing stable currency, thinking they can do this type of, so all of these different things that are happening are all based on the fact that they see the innovation coming from our space, not from the traditional space. So they want to be in it.
Sure. Just staying with you for a second, Diego. Do you trying to avoid the US and China really as much as possible? Do you see anything else happening anywhere else in the world that is particularly interesting and that is worth keeping an eye on?
Yeah, I would say that in Europe, there's definitely, from a regulatory perspective, there's a lot of regulators. They're a little bit ahead of the curve. There's regulation coming out in Germany, for example. I would mention that Portugal is pretty pro crypto in the way that they actually deal with crypto. There's some collaboration now being done by the whole EU to actually have regulation that spans the whole European Union market. So that's also pretty exciting. And we always had countries that were ahead of the curve, like Estonia, that already had digital identities, that are are going to probably the first ones to actually adopt something like CBDC because it's just already so natural. They already have an online relationship with every single one of their citizens. The step to actually have a digital wallet is minimal.
Jill, turning to you, I mean, based sticking with that regional kind of slant to the question there, some of the countries around Bermuda and regions there have been the most forward-thinking in terms of central bank digital currency regulation and progress. Is there anything particularly from the region that you think is especially noteworthy?
Yeah, sure. I mean, well, they just launched the sand dollar, which is exciting to watch. And, you know, I hate to beat the same drum. I mean, we are very excited about what Bermuda is doing. I mean, I think they've created an incredible framework for innovation, right? Out of necessity, but also out of desire and demand, right? To attract the right private partnerships at the table with government, working in tandem to solve a lot of issues, including stimulus package, right? So they launched a stimulus coin. They announced a stimulus coin in partnership with our partner and a company we love, Stablehouse. And so, you know, we're excited to see how some of those smaller islands are operating or navigating. And again, like Bermuda, which is we think is, a fantastic jurisdiction from a regulatory perspective. And it's safe and it's secure. And they've been working towards financial innovation for years and years and years. So, you know, I hate to beat that drum, but Bermuda is really one of our...
It's a good drum. We like the sound of that drum.
They were also forward thinking in allowing for their taxes to be accepted. Is that correct in digital
That's
assets?
Right. It was announced last year.
Which is a huge catalyst for a changeover in terms of the value or the reason of what you need to be storing. Is oftentimes that payment of taxes is so critical. So the US gets a lot of criticism of why would I adopt this when I still have to pay in dollars.
That's right.
So I do think Bermuda is ahead, and those others that are adopting taxes in digital form is quite advanced.
And Alan, anything from you about particular countries around the world where anything that you think is particularly noteworthy going on?
No, I don't think I can add anything. I think someone mentioned earlier, the 80% of I don't remember if it was the G20, but the bottom line is almost every major country is working on a CBDC. Some are further along than others, and I would say that the U.S. candidly is a little behind a lot of the other countries, but I think we can catch up fast. It's still a new space. There's a lot to figure out, and I'm just really glad that the conversations are happening.
Sure. I think I'd like to push back, Alan, on something that you said earlier on, that this is an inevitable development. I think probably everyone on this panel shares your view that we are moving in that direction. But I would like to hear your perspective on what the biggest hurdles there are to overcome. While it might be inevitable, there certainly will be challenges along the way, potentially making it more difficult or making it take more time. What do you see as the biggest single thing that either the US or any individual country, or perhaps just the world entirely needs to get over in order to make CBDCs a reality?
Yeah, there's a lot there, Billy. So let me just try to run through off the top of my head. I mentioned earlier. So first of all, let me say, when I say it's inevitable, I'm talking about the digitization. Not necessarily a CBDC on a blockchain. Okay, whether it's because blockchain can be used and misused, but a central bank digital currency where the dollar has the ability to be digitized. Some people would say, oh, it's already digital, but it's really not. Looks like Catherine did this. I don't know if everybody can see this on the screen, but are you okay up there, Catherine?
I'm okay, just checking.
A little bit of an earthquake going on, so.
In case you saw anything coming down or the ceiling falling down. Just,
it wasn't just a bad signal this time, it was actually the whole ground shaking.
Yeah, hopefully that wasn't a form of divine intervention coming.
We need some form of catalyst like that to get this.
Yeah, that's right.
let's talk about the challenges. Okay, I mentioned earlier that, you know, and this, by the way, when we get into the crypto conversation, like the cryptoverse, there's some stuff here that's really controversial as well, right? Which is the whole concept of fractional reserve banking, right? The fact that the way that the federal government stimulates the economy is by adjusting the reserve requirements of banks. You know, banks can then lend more or less. That's all based on the fact that each one of us on this panel can have a deposit in a bank, but the money's not really there, right? The money has been lent out in this form of fractional reserve banking. It's been lent out to others for them to buy houses and cars and, you know, whatever else. And so when you move to where if a central bank is directly distributing the currency, well, then I don't need to, individually, not me as Alan at Silvergate, but me as a person, I don't need to have an account at a bank anymore, which means now all of a sudden there maybe aren't deposits in banks, they're just all at the Fed. Well, then how does a bank lend? And we might all say, well, you all might say, I'm a banker, so this means something to me. But others might say, well, those bankers, they shouldn't be lending anyway. But the fact of the matter is, well, then how do people borrow to buy the things that they want to buy, like, you know, house or car, you know, et cetera. And so that's kind of the whole economic stimulus side of things. You also have, just the interface, you know, the usability, right? That's going to take some time to figure out, right? So let's assume that we figured all of that stuff out, and now I've got a digital dollar. Well, it has to be accepted places. You know, one of the reasons Tether, you know, we've gone through this entire conversation. We haven't talked about any of the stable coins out there by name, but one of the reasons Tether has been so successful is because they had that kind of first mover advantage, and they've got this huge network effect where pretty much every crypto exchange out there lists Tether, in a trading pair with other digital currencies. So how are we going to make sure that a digital dollar is accepted everywhere? So, you know, there are so many things to figure out that it could be daunting. And so the way I always approach those things is, well, let's just get started. You know, let's just start walking down the path, and we'll figure it out as we go.
Sure, and I think I think that is a good time to bring Tether more fully into the conversation, and I'll turn to Catherine on the Tether issue. I mean, is Catherine, like, to go more directly to our main question here? Will CBDCs become the norm? How much do you think Tether has been part of this normalization of central bank digital currencies?
Billy, I think Catherine is no longer.
We just lost Catherine.
Yeah.
Well,
I can go. I can start.
Yeah,
I would say, yeah, stable currencies were definitely a big portion of CBDC as an idea. The first digital currency and cryptocurrency in this case that really, you know, captured people's imagination was Bitcoin. Bitcoin is a very specific type of cryptocurrency that is highly deflationary, that has a capped issuance, and is actually highly volatile. And it trades, there's volatility towards the other trading pairs. It was really only when we had stable currencies, Tether being one of them, that people could actually trade in and out of these other cryptocurrencies like Bitcoin that had volatility. And it was part of that use primarily for speculators and traders to actually come back to safety and to actually trade towards these pairs. That was the first use case. And then it became obvious that Tether was actually a lot more convenient to actually send US dollars or US dollar equivalents towards other exchanges, so you could trade on multiple exchanges. And so it started actually, you know, being climbing on the pyramid of money and being more and more used, until obviously people looked and said, hey, under the hood, this might not make a lot of sense, or I can do this better. And so all these other stable currencies came to be. And now we have another area of research, which is interest-bearing stable currencies. Why would my stable currency not issue some interest and make me some money by just being there? Why do I have to just let it sit there and devalue like the US dollar? Can we actually do a digital dollar that is better than my non-digital paper money?
Sure. I think we're almost out of time. I'd like to go round the panel and just get as a succinct answer as possible for our primary question here, which is, will CBDCs become the norm? Jill, if we could start with you in as few words as possible, do you think CBDCs will become the norm?
Yeah, so I'll say very quickly, just that if you asked me a year and a half, even maybe 3 years ago, I would have said we had a 10-year time horizon in terms of probably the acceptance normalization. I think the suite of macro factors and micro factors have now accelerated that timeline. And so the answer is yes, and I think it's a shorter timeline of acceptance, utility, closer to 3 to 4 years.
Thank you. Catherine, turning to you.
Yes.
Short and sweet. Alan, I think we've already heard your answer today, but and finally from you.
Yeah, I think, as I said at the outset, I think it's inevitable, and but I'm not sure on the timeline. I mean, it could be, as Jill said, it could be less than 5 years. It could still take 10. You know, I mean, Bitcoin's only been around for what, 12 years, and so yeah, it's going to happen. It's just a matter of when.
And Diogo, finally,
in that waiting time, we will continue to build. So
that's right. What I was going to say is that yes, this will happen, and part of the reason why it will happen is, you know, we're helping it happen. So we're the ones building it. We are the ones talking and creating the technology and the products that will actually allow central banks to do this. So that's why we're so confident that it will actually happen.
Brilliant. Well, I think that's all we've got time for. So thank you all for joining us today.
Thank you for having us.
Thank you.